welcome back. In this section, we'll delve into the regulatory considerations for decentralized finance. Understanding the regulatory landscape is crucial for navigating the DeFi space effectively. By the end of this lecture, you'll be familiar with current regulatory trends, the challenges DeFi presents to the regulators, and strategies for ensuring compliance. Regulators face several challenges when it comes to DeFi. Firstly, decentralization. DeFi protocols are obviously decentralized, meaning that there is no central authority to regulate. This contrasts with traditional finance, where centralized institutions like banks are subject to strict regulations. In DeFi, it's much more difficult to apply these regulations to a specific entity. Then there is the anonymity. DeFi transactions can be mostly anonymous, making it difficult to enforce the AML and KYC regulations that in traditional finance all banks are subject to. And then there is the cross-jurisdictional issues. DeFi operates globally, transcending national borders. Regulators must navigate the complexities of applying their laws to a borderless digital ecosystem. Obviously, in traditional finance, regulations are typically enforced within specific jurisdictions only. Regulatory approaches to DeFi vary significantly by region, reflecting different priorities and levels of acceptance of decentralized technologies. In the United States, regulators have adopted a cautious approach to DeFi, focusing on applying existing securities and commodities regulations to DeFi projects. The two primary regulatory bodies involved are the Securities and Exchange Commission, the SEC, and the Commodity Futures Trading Commission, the CFTC. The SEC focuses on ensuring that DeFi projects comply with securities law. This involves determining whether certain tokens qualify as securities under the Howey test, which assesses whether an investment contract exists. Projects deemed to offer securities must comply with registration and disclose requirements. In 2024, the SEC issued new guidelines for DeFi platforms, emphasizing the need for transparency, proper disclosure of risks, and adherence to investor protection laws. These guidelines also address the responsibilities of DeFi developers and platform operators in ensuring compliance. The CFTC oversees commodities and derivatives markets, which includes certain types of cryptocurrencies. The Commission has clarified that digital assets like Bitcoin and Ethereum are considered commodities. As such, DeFi platforms offering derivatives or futures must comply with CFTC regulations. The CFTC has been actively investigating and bringing enforcement actions against DeFi platforms that offer derivatives without proper registration. In early 2024, the CFTC proposed new rules to simplify the registration process for DeFi platforms, aiming to encourage compliance without stifling innovation. In the European Union, the regulatory approach to DeFi is more structured, with the development of a comprehensive regulatory framework called the Market in Crypto Assets, or MiCA regulation. MiCA aims to provide legal clarity and protect consumers whilst fostering innovation in the crypto assets market. It introduces uniform regulations across EU member states covering various aspects of crypto assets, including issuance, trading, and custody. MiCA applies to issuers of crypto assets, service providers, and DeFi platforms operating within the EU. It mandates that entities obtain authorization to operate, adhere to transparency requirements, and implement measures to prevent market abuse. Countries in Asia, particularly Singapore and Japan, are known for their progressive and innovation-friendly regulatory environments, encouraging the growth of DeFi whilst ensuring consumer protection. In Singapore, the Monetary Authority of Singapore, or MAS, has implemented a forward-thinking approach, providing clear guidelines for DeFi and crypto businesses. It has introduced the Payment Services Act and the Financial Services and Markets Act, which regulate digital payment tokens and related services. In 2024, MAS launched a regulatory sandbox specifically for DeFi projects, allowing developers to experiment under regulatory oversight. This initiative aims to balance innovation with risk management, enabling projects to develop safely. In Japan, the Financial Services Agency regulates DeFi through the Payment Services Act and the Financial Instruments and Exchange Act. These laws require DeFi platforms to register and adhere to strict AML and KYC standards. The FSA has been actively working on refining its regulatory framework to better accommodate DeFi innovations. In early 2024, it introduced new guidelines to streamline the registration process for DeFi platforms and enhance the consumer protection measures. Comparing these regulatory approaches offers valuable insights. The United States focuses heavily on compliance with existing securities and commodities laws, emphasizing transparency and investor protection. In the European Union, the regulators provide a comprehensive and harmonized regulatory framework designed to ensure market integrity and consumer protection. And regulators in Asia are encouraging innovation through clear guidelines and regulatory sandboxes, balancing regulatory compliance with support for new technologies. In summary, understanding the regulatory landscape across different regions is crucial for DeFi projects and investors. By staying informed about regulatory developments and adopting strategies to ensure compliance, DeFi projects can navigate regulatory challenges effectively and build trust with users and regulators. Despite the regulatory uncertainties, there are strategies you can employ to ensure compliance and minimize risk. Tools like Chainalysis, Elliptic, and TRM Labs provide transaction monitoring and risk assessment to identify and mitigate illicit activities. By integrating these tools, DeFi platforms can enhance their compliance frameworks and reduce the risk of regulatory breaches. Another strategy to ensure compliance is through using permission tokens. These digital assets incorporate regulatory compliance features directly into their protocol. They can only be transferred between wallets that have been verified through KYC processes, ensuring that only compliant participants can hold and trade these assets. Examples include Polymath and Tokeny, which use built-in KYC and AML compliance to simplify regulatory adherence. Then finally, there are tailored DeFi platforms. These platforms are specifically designed to meet regulatory requirements, offering compliance-focused services. Examples here include Circle Yield, a DeFi-based yield product offered by Circle, the same people as USDC. This allows institutions to earn high yields on USDC with robust risk management and regulatory compliance. Another example is Centrifuge, a product focused on bringing real-world assets into the blockchain, allowing institutions to tokenize and finance assets like invoices and real estate. To wrap things up, let's discuss some future trends in DeFi regulation. Regulators and DeFi projects may increasingly collaborate to develop frameworks that protect consumers whilst fostering innovation. This mirrors how traditional finance entities work with the regulators to shape different policies. There may be a move towards establishing global regulatory standards for DeFi, much like the Basel III Accords for banking, which aim to strengthen regulation, supervision, and risk management within the banking sector. Further regulations may focus more on consumer protection, ensuring that users are informed about the risks and benefits of DeFi products. This is similar to the consumer protection laws in traditional finance that safeguard investors. In summary, while the regulatory landscape for DeFi is still evolving, understanding current trends and employing compliance strategies can help mitigate risks and build trust. By integrating KYC and AML measures, conducting regular smart contract audits, and leveraging RegTech solutions, DeFi projects can align more closely with regulatory expectations. This alignment not only enhances security and trust, but also fosters innovation and growth within the DeFi space. In the next section, we'll get hands-on and walk through some different DeFi platforms. I'll see you there.